Why is NIO going down again? Let's analyze it together. But first of all, guys, remember to read the disclaimer right here and in the video description below. I gotta tell you guys, I was surprised with this incredible rebound right here that you can clearly see. And actually, if we activate the MACD, we probably will be able to see exactly, yeah, look at that, you know, a bullish divergence back, you know, when between April 2024 and August 2024. Bullish divergence in the MACD and in the RSI. The price was sideways, and then the RSI and MACD were indicating like a bullish divergence right here, as you can clearly see. So right now it's a completely different story because look at what's happening, because the stock is minus 42% since those highs, you know, established back when it was trading at 7.69. And the thing is like kind of worrisome, you know, because it's going directly again to the support area of 3.77. So obviously the situation is critical, and it doesn't look good, you know, from the technical analysis perspective. Also, if we go to the fundamentals, it doesn't look good at all, you know. I mean, we're talking about a stock that is in losses. It has in losses like forever. When the stock never, it was never in profits, you know, in positive territory, and that's important, you know, because when you analyze the stock, in my opinion, of course, I prefer, you know, to stay on the sideways when I see stocks are in losses. Probably they are, you know, when you buy a stock in the early days, you know, they are growing in that growing phase when they are starting, you know, where they are on a startup or a startup company, they need capital and so on. That could be the case, but look at, you know, that was when it was trading between 2018, 2022, in that area. That was the phase. But right now, it's like the phase has ended. You know, investors in the end, they need to get profits, and this never-ending downtrend that is experiencing NIO is insane. You know, we're talking about when it was trading at $70, the downturn is minus 94%. So that's huge. I mean, it's a huge number, 94%. The situation right here is like if it goes to 3.77 again, we have two possible scenarios. I mean, it looks that it's going into that direction, into that direction, you know, because there are not much resistance right here, you know, and then after that, a probable rebound to $5 again, and the problematic situation if it happens, and this is important because it has to happen. If there is a breakout right here, for instance, there are two possible scenarios, like typical retest and then going down, and then the second scenario, which is going down directly to the lower part of this channel that we have right here, this blue enormous channel that we have. So in the end, the problematic thing with NIO is like it's still a losses, you know, and that's they need to improve those numbers in order to see the stock rebound them for good. And then we have the technical analysis that right now is like selling sword, you know. You can clearly see right here, it's like it went from the top of the channel and it's going down again, you know. So let's take a look at the forecast, because this is my opinion, of course, but we need to see exactly what they, you know, the analysts from Wall Street think about this one. And this is surprising, you know, because they actually have an average. We're talking about 28 analysts from Wall Street. The average is plus 48. It doesn't mean it's going to happen. I mean, it is their opinion. They can be right, they can be wrong, as well as I, you know. And the thing here is like the estimate. In this case, they are like having a super long-term approach in that sense, you know, because obviously if they think the average is plus 48%, it's because of this, you know, because they are estimating better results over time. This is like updated from time to time, you know. They update the ratings and so on. But the thing here is like they see small improvements, you know, every quarter. In my opinion, normally I don't think this is enough, because in the end, the company is still in losses. And I know that because I invested in companies that experience exactly this. And I hope, okay, the data, the fundamentals, the EPS and the revenue is going to be better every quarter, a little bit better. But, you know, it's still in losses. And as it's still in losses, you know, in the end, investors pay the bill. That means that the stock, it could suffer, you know, downtrends in the future. That is something that you should avoid, of course, because you don't want to, you know, stay on the sidelines right here forever, is waiting for a rebound and in the end ending into profits, you know. So that's the problematic thing, you know, the fundamentals, the technical analysis, but obviously the opinion from Wall Street analysts could be they are thinking about this long-term approach, you know, like in the end the company, it could turn into profits. The data we have from here, I mean, it's a long way to go. We're talking about profits maybe in 2028. I mean, you had to hold this stock for 4 years. You know, that's a long way to go. But obviously, if you have the stomach to hold it forever, that's good, you know. I mean, yeah. But the thing is, like, buy the stock at a better price and hold it for the long term. That's the idea. Those who buy at the lower part of a downtrend, that's good. But you have to wait for that to happen. You know, you're gonna buy the stock. For instance, those who bought the stock right here, you know, for instance, let's say $40, they're losing money. Those who bought at 22, they're losing money. Those who are buying at $10, they're losing money. And right now, if you buy a $4 and it's still going down, they're gonna lose money anyway. So it's something that you need to consider, the risk reward ratio. You know, that's the most important thing in trading. So guys, this is an update. Thank you very much. Leave your comments below. What do you think about this stock? Is it a buy? Is it a sell? Always subscribe to Trading ST to watch more content like this.